From the trading desk of dailyforex.com, this is Christopher Lewis looking at the upcoming September 19th Forex session in the Euro US dollar pair. As you can see on this chart, we have fallen. This little nub here is actually right after the GMT close, but we have fallen during the Tuesday session, and this was directly after a shooting star that had formed in the market. What was interesting to me, and I had mentioned this recently, was that even though we saw quite a surprising rally and caught most people off guard, we had entered an area that I suggested could be pretty massive resistance because of the fact that it was a nice descending triangle. In order for this to form, there is a lot of pressure to the downside. So now that we're pulling back, this isn't a surprise. Now the question then becomes, what happens next? Now, looking at this chart, the 130 level is an obvious area. It's a nice large round number. It was the base of this ascending triangle, and we could see a bit of a bounce there. So we will have to wait and see. This is the perfect setup for the type of trade where you truly must wait till the end of the day to see how things end up. The reaction to 130, perhaps we get a hammer. Well, if you jump in too early, you could be selling right before it pops back up on you. This is why the end of the day close will be so important. If we can close below 130, then you have to ask, where can we go next? And for my money, right about 128 is where we would be looking. You can see that it's maybe not a major area, but it should at least be somewhat supportive. Below there, once we get below 128, I think then it becomes a matter of 125, and if that happens, we probably will accelerate to the downside. You have to think about this rally that we've seen recently. Let me go ahead and clean some of this up here. The rally that we've seen recently has been predicated on a lot of different things, really. It's predicated on the ECB willing to go out and buy 3-year bonds. It's a good thing. It stabilizes the bond markets in certain countries. The usual suspects, Spain, Italy, etc. The problem is the Spanish are the biggest concern right now, and they're not asking for the help. A little bit of Spanish pride, perhaps, who knows. But nonetheless, until they offer the help, the ECB is not going to step in. So during the Tuesday session, you start to hear grumblings of whether or not this is actually going to happen. You had the Federal Reserve ease its monetary policy and promise to start buying mortgage-backed securities as well. Pretty much anything to kill the US dollar at this point. So you had a bit of boost in this pair because of that as well. And the short covering rally and some people speculating to the long side that the dollar is going to get crushed really has beat up on it. But let's look at the last 2 weeks. It's been literally a straight ride up. So in order to pull back to the 128, you'd be looking at about, from somewhere around here, about a 50% retrace. So I think that's probably where we're going to go, but we have to clear 130 to be sure about it. If 128 gives way, there's really nothing to stop us from retracing the entire move. If we retrace that entire move, that would have to have people concerned that we saw this rip straight up of about 650 pips and just turn around and give it right back. This pair is one of my least favorite pairs right now to play the euro, quite frankly. I think there's easier ways to play the euro if you're bearish or bullish of it against other currencies. Right now, with all the quantitative easing and the fact that the Europeans are going to be buying this bonds and then therefore weakening the euro itself, it's only a matter of time before we fall again. Now the question is whether this area holds. I really think 130 is important, but I think 128 is even more important in this pair, and that will determine the next several months. It's a very interesting time, but with the quantitative easing going on, I think commodity currencies will more than likely do better than the others, and if that's the case, Euro Oz, Euro Kiwi, those types of pairs might be more interesting. This pair has been more volatile over the last couple years than I can remember, over the last, say, 8 or so, the last 2 years especially. So having said that, it looks like we're going to get more volatility, but when you look at the chart, you can see that there are 2 specific levels that we need to be paying attention to. 130, it's a binary question. Support yes or support no. that can be based off of the daily close. And if support, the answer is yes, then we probably bounce and we probably grind much higher. It might take a while, but that's my suggestion. And if we fail here, then we come and we test 128. It's really nice and binary at this point. If we fail 128, obviously we go down and we go to try to find the next support level. It's really what trading is all about. There is a possibility that we pull back and we pass. Then at that point in time, we're aiming for 120, and we have to ask the same question then. This pair is very regimented in the fact that it's got very specific levels it's trading back and forth. So it'll be interesting to see, but this is a very interesting day that we have coming up, as it will answer one of these questions.